If you have been invested in Amazon since about 2015 or 2016, you would have your money tripled. And that's coming after the price of Amazon tanked 30%. So today, on June 6th, Amazon stock has split into 20 pieces. What that means is if you had owned one share of Amazon previously, today you now have 20 shares of Amazon. Now, a lot of people are like, oh my gosh, this is a no-brainer. I need to put my money in Amazon before, well, today. But thinking that they're going to x20 their money. That's not how this works. In simple terms, it's, okay, this is going to be completely not simple at all. We're going to do some cloning. I'm a little bit sick, by the way. Sick of these epic stock market prices. And if you're also sick of these epic stock market prices, drop a like below. That's all I ask you. If you are remotely entertained and informed, because education without entertainment is simply information. So here's my kind of convoluted example that will get the point across, and you will understand in the next minute how this stock split works. Say you had a watermelon. This represents one stock of Amazon, and I cloned that watermelon 20 times. You're thinking, wow, now I got 20 watermelons. And you would be absolutely right. The value that you have now is times 20, since now you got 20 watermelons. But I also shrunk each one of those watermelons 20 times. Now you got a lot of little mini watermelons, and you have 20 of them. But at the end of the day, you still have the same amount of watermelon. Just like with Amazon stock, you still own the same portion or percentage of the company. So with that being said, you are not gaining more Amazon. When Tesla did this, people did not gain more Tesla. When Apple did this, people did not gain more Apple. They did have more shares, but they had the exact same amount of that company. So, should you put your money into Amazon? Well, a lot of data suggests that after a big company like Amazon, like Apple, does a stock split, we end up seeing higher returns throughout the next 12 months. On average, a company of that size that does not do a stock split goes up about 9% or so. However, after a stock split, a lot of data shows that companies of this size go up about 25%. However, that being said, why are they going up? Well, because I got too excited there. Small, little, itty-bitty watermelons are really fun to talk about. And usually when something is talked about, more and more people start buying in. Now, the price is smaller, but in the United States, that does not mean that it's easier to acquire it than it was before the stock split. Because on apps like Webull, on apps like Robinhood, if you've been listening to me talk about stocks, you know you can already buy partial shares. So previously, if Amazon cost $2,500 and all you had was $25, you could buy a $25 piece or slice of Amazon. Now, more traditional brokers like Merrill Edge, which does not have the partial trades feature, can now allow for more accessibility to Amazon stock. Maybe that'll drive up the price a little bit, but at the end of the day, accessibility to stocks is not the key variable. It is a key variable, but not the key variable of what maintains price over the long run. Because at the end of the day, it all comes down to how much profit is Amazon raking in. And splitting their stock into 20 separate pieces does not impact their business whatsoever. Now, one strategy that a lot of people might not mention to you about stocks splits is it is easier to trade options, and especially using the covered call strategy. Now, I have a video for beginners on options trading, and if you're interested, you can simply click the little link above my head right now. Now, if you feel like you got your values worth from this video, drop a comment and be like, yo, I got my values worth. Thank you. This was short, sweet, and concise, like some of the greatest things in life. With that, subscribe to your boy Funancialism. I'm out of here. Thank you so much for your time.